I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim. Crude
oil, is it in a free fall?
It sure is. You look at the monthly chart, really, it's, free fall for two months. And, are we near a bottom? I do think we are near a short-term technical bottom. The price has fallen down to a really significant pivot mark, for the price of crude oil, going all the way back more or less to 2004, 2005, all the way to 2000 to where we are here, really. There's multiple tag points of this level, this $56, $55 area. And if you're below it, we've seen it get rejected. If we're above it, we've found it as support. And that's pretty much the reason why we're stuck at it here today. We saw, crude oil down over 10% yesterday, and it's fallen into the support zone. It's oversold. And today it's trying to find us the short-term technical bounce. I think we could see more of a bounce from this area going forward, but overall the chart of crude oil, it needs to find support here at $55 and go higher, because if it breaks down, things could get pretty ugly.
When you talk about ugly, how ugly?
Well, based on pretty basic technical analysis, we've got potential for it to go all the way down to $39 a barrel, which would do some significant damage to the price in the chart and probably keep crude oil down for a long time. Crude oil really just kind of put in what looked to be a bottom and still could be a bottom in 2016. And we are at this first major level where it has to find support here, because right now it is more or less in a bull market and it's at major support. If it breaks this level, then we're headed that significantly lower, and we're going to fall right back into more or less a sideways or dead or bear market for crude oil. But right now it is at a support trend line. It's at all kinds of different support levels based on price. And I think it can find a bounce here. The question is, will it have legs and have a V-shaped recovery and take off and continue to go higher, or is it actually going to just have a short-term bounce and roll over?
Now, of course, when we talk about oil prices, we're talking about West Texas sweet oil at $56 and change. Western Canadian Select, $16.07. How can Western Canadian oil producers make any money at all at that price?
Yeah, I don't know. And if crude oil continues to fall, it's going to put a huge dampen on Canada in general and the loonie, the value of our currency, because we're very tied to the petro. So we're at a critical turning point here for not only just crude oil, but for energy stocks and even a good chunk of the Canadian economy.
How important is it for pipelines to be built if we want to keep our economy churning?
Yeah, I think the pipeline seems to be a good way. I think it could streamline things, but I don't really know how the whole impact of it will help the economy and the whole details of it, though.
Well, even in the U.S., they find they have a shortage of pipelines, and even though they're getting all kinds of shale oil out in Texas, they're finding it hard to get to market. They don't have enough pipelines there either. So pipelines everywhere seem to be an issue. It's just not Canada.
Right. Okay. Yep.
Going on too with the price of oil and the Canadian dollar, what are your projections on the Canuck buck?
Well, yeah, the Canadian dollar, it's been under pressure. Obviously, with crude oil pulling back, it just continues to fade. It's making multi-month lows here. And if crude oil continues to flounder down here, or actually starts to break down, the loonie could be set for another big drop, and we could see it right now. It's trading at 75.5 cents or so. We could see that continue to fade all the way back down into that potential 65 cents, another 10 cents from where we are, which is a significant drop, bringing us back down to, prices we haven't seen since 2003.
And of course, going into winter, Canadians import all their veggies and fruits and so on. Is that really going to see the grocery basket go up in cost if we have to pay more to bring it in?
Oh, for sure. We're going to see, the weak dollar just makes everything so expensive, or the weak loonie makes everything so expensive for all the imports. So it could be a very costly winter, depending what crude oil does here, because the rest of the market will follow suit.
Maybe stick to canned salmon and tomatoes.
Yeah, I was at a TEDx, and a guy was talking about all of the fishing in Canada and the mega ships out there, and how most of the fish, how it has to go around the world twice and back again before it comes back in a can. It's crazy how much goes into fish caught right off our coast, how much traveling it does to get back here.
Yeah, and then I found out a lot of our fish is from Russia, but it doesn't say that. It just says canned in Canada.
Right.
Yes.
Yeah.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, after discussing the Canadian dollar, we always compare it to the U.S. dollar. How is the U.S. dollar looking?
Well, the U.S. dollar's been holding its ground. It really hasn't, when you're looking at the long-term charts, we've been trading in more or less a range we've seen from 2015 to 2017. We're still kind of trading right in the middle of the range. The dollar is holding up really well. It's higher for the year. It's had a nice run for 2018. At this point, it's still holding up, and if that dollar continues to trend up as seen as a safe haven currency, then that's going to keep some pressure on commodities. It's going to keep pressure on other currencies. So, right now the U.S. dollar is kind of floating kind of in a neutral area. It might work its way up to about 100. Right now it's at 96. But really it's going to probably continue to oscillate between this 92 and probably 98 range in there. And really there's not a whole lot of insight into the dollar at this point. It's holding up and it's just kind of drifting. We need to see some type of big breakout to the upside or the downside for something significant to take place.
To see any big movement in the British pound or the euro, are they going to have to settle this Brexit stuff that they never seem to get around to doing?
Yeah, I don't follow any of that, so I'm not too sure. Although the euro chart, based on the monthly analysis, is actually looking fairly bullish. Depending on how you want to look at it, it looks like it's ready to move higher. And if that's the case, because it is very much so almost a mirror image of the U.S. dollar, the U.S. dollar is kind of drifting. We're close. We're only a cent away from resistance, which could be seen as a bear flag in the U.S. dollar. So yeah, there is potential here for the euro to actually have a nice rally. The chart looks actually very bullish, looking forward several months from now.
Do you believe the Fed is going to hike interest rates a few more times, and would that not support or boost the U.S. dollar?
They probably will. Obviously it hurts the stock market when they do that. Good for the dollar. Obviously, if they do that, and the dollar should continue to climb as kind of a safe haven, higher interest paying currency, that will put pressure on the commodities. But it depends on how much pressure they want to apply to the stock market as well. The stocks are getting beat up pretty good. They are, near some critical levels that if we don't find support from these recent lows in the last month, we could be entering a bull market. We're very close. Overall, when you step back and you look at the broad stock market charts on a monthly basis, we are still in a raging bull market. We are oversold. We're at support. But this could be potentially, we might only have a few more months of a rally on the charts. If the charts are actually forming a head and shoulders topping formation, it looks like we're in the early stages of that. But we won't know until it actually unfolds and we see a breakdown. So the charts are starting to get close to a bear market, very close. And I think 2019 could be a very ugly year for equities and could be pretty ugly for commodities as well.
We'll have more with Chris Vermeulen right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, gold is trying to hold on to the $1,200 mark. If the stock market does take a dip, do you expect gold to go up from there?
I think gold will hold up fairly well. The big question is what are the more speculative precious metal plays going to do, like silver miners, even gold miners, because gold seems to always have a kind of a safe haven bias where the average investor, when they start to get worried, they'll just kind of tell their advisor, buy me some more gold. And that's what we tend to see. When there's a lot of fear in the market, we'll see money move into gold and it hold up. But the big question is, again, are we going to see the miners do that? And they really haven't been performing that well. They came down for more or less a double bottom this week based on the daily chart, and they're having a very strong bounce today. So we'll see if they can find some traction. But overall, if we see the market continue to sell off and we see this fear in the market, I think short term we might see the precious metals perform a little better. But when the overall economy kind of goes into a bear market, just like what we saw in 2008, gold, silver miners, they all get hit. Pretty much everybody starts to liquidate everything, and there still could be some more downside. But right now, precious metals are trying to build a base, and they're looking like they could rally here very shortly.
What about platinum and palladium?
Well, platinum, both platinum and palladium have been performing, pretty weak, just like the other ones. But if we take a look at the platinum chart, it has had a much more of an upward bias than what the other precious metals have done, and it's pulled back to a support zone. So I do like platinum simply because it's been in an uptrend for a while. And if we take a look at palladium here, palladium is forming this beautiful kind of bull market pattern here on the monthly chart that looks like it's ready to explode to the upside. It's actually a very bullish chart, completely bucking all the other precious metals. So out of all of them, palladium looks like it's ready to rocket several $100s higher at this point.
So, Chris, summing things up, what do you think oil could hit? Could it dip back down into the 30s?
I think it is possible. I don't really think it's going to happen. I have a feeling we're going to see it find a bottom somewhere here in the mid 50s. We're going to see some type of recovery up to the $60, $62 per barrel level. At that point, I think we just need to see if it's going to reverse back down and crash to around 39 as the downside target that I have long term. or if it's going to break out and continue to move up back into the 70s. So at this point, crude oil looks like a buy. And we didn't really touch on natural gas, but natural gas is doing the complete flip side of what crude oil is doing. Crude oil, the bottom's dropped out. It's gone to multi-year lows. Natural gas, it has popped and exploded and is hitting multi-year highs. And they both are almost inverse charts in terms of the type of setup. One is a major buy for a technical bounce. One of the natural gas is like a short for a technical drop. So really interesting price action in the energy sector really this week.
Yes, and there must be confidence in the natural gas sector to have those major investments go ahead with the Kitimat liquefied natural gas plant in British Columbia. That's a $40 billion investment, the largest private investment in Canadian history. So there's got to be some kind of confidence.
Yeah, well, yeah, exactly. And that's a huge play. That, the liquefying, that's kind of, it's very new. It's a huge market. And I think it just goes to show that the potential, we've got so much gas. If we can actually move it, it's just amazing, how much potential is there. So this could be part of a big pop. I think a lot of this is excitement and weather related, but there's definitely some big things underlying that are taking place that go to show there's a lot of money to be made in the natural gas market in general.
Yes. And Asia does want to get rid of their coal-fired power plants. And even though I know the critics say, well, natural gas is still a fossil fuel, what would you rather have working next to your house, a natural gas power plant or a coal-fired natural gas fire plant?
Yeah, exactly. Yeah. So I think natural gas is, it's a very clean energy and it's, there's lots of it. So why not put it to use?
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to us to info@howstreet.com. Our popular YouTube channel is Talk Digital Network, and you can find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.